Hey guys, what's up? Happy Friday. Today is, I think it's a pretty good day. We had some clean trades today. NQ is really shaping up nicely for the month of February. January was tough. Don't get me wrong. January was a tough month to trade. And for today's video, I want to go over just some stuff ICT's talking about over his last couple of lectures that he had in 2026. And I want to talk about two of my trades, which I took today, pre 9:30 and post 9:30 session, and kind of go through some of the concepts that IC was talking about over his last couple of videos and how I'm applying it to my trades. So here's a snapshot of my Top Step X account. Currently, I have 5 Express accounts. 4 of them are 50K accounts, and one of them is a 150K account. The real reason why is when you're getting called up to live, they do an average. It used to be the highest one, and that's the live account that you get. But 4 days ago, they switched the rules to they take an average of the 4. So they would give me, assuming I would get there, 100K live account in a couple of weeks. So all in all, my goal leading up to that is racking all these accounts up to 10K, doing a 5K payout per each one, so 25K USD, and then just do it 6 more times. And then hopefully they don't call me up to live until I get to that 6th payout. So currently we're sitting at what? Just over 4,500, 4.8. I'm hoping over the next 2 to 3 weeks, we do hit 10K per account, and then I'm going to be ultimately withdrawing. I'll take you guys through my process here, but this time is different. Usually I do 1 or 2 payouts and then I burn or crash my accounts and then I blow my accounts. But this time I'm very strict on my risk. So here are some rules. All right. So number 1, very fixed risk. If I take 1 loss, my next trade is going to be 50% risk until I recuperate that back. And then, of course, I'm going to scale into that position if it allows me to. But that, and again, A+ setups only. I'm waiting for liquidity sweeps before entering. I'm waiting for clear, obvious levels. Like price has to stand out and say, hey, take me. I'm going to this direction or level. And these are some of the trades that I took today. So maybe let's go through them and let's see what NQ was cooking up today for Feb the 13th of 2026. So let me hide this here. Again, entries, exits, but that's that. All right. So I want all of you to understand kind of how NQ moves. And some of you might be better traders than me, and some of you might just be starting off. Disclaimer, I'm not the best trader in the world, but I'm not even trying to be the best trader in the world. I'm just trying to be more and more profitable and just pull out more money from the markets. That's really the goal here, and just to share some knowledge with all of you of what works for me, and maybe that might work for you. Again, we're all different, but that's kind of the consensus. So looking at the 1-minute chart, which is the bottom half of my screen, price opened up right here at 24/7, and just if I were to squeeze the charts, look what it did. It pushed lower. It took out Asian lows. Okay. It reversed very aggressively. It pushed up higher. It created these extremely smooth highs. Look, 1, 2, 3. That is the level that I was interested in. But seeing those being the London highs plus relative equal highs, that was, indicator number 1. Like, oh, you know what? Maybe we might take these in the pre 9:30 or the 9:30 session. And above us, we have the new day opening gap of February 13th. So again, a draw. It's like a black hole. And when I woke up around 6:30, I had my coffee. I actually have broth in the morning now just for extra protein. My broth and then my coffee. I looked at the charts and I kind of said, okay, we just sweeped London lows here pretty aggressively, right? We had a market shift to the upside. Price pushed up, came back lower. This blue box right here, it's a bullish breaker. Came down once, twice, respected it, and then pushed higher. Again, I wasn't really convinced there because A, we weren't in a macro time, and B, nothing was really happening. But what price did is it created relative equal lows below us. Again, I was a bit sketched out by that with the aggressive rejection here, but you can see here price fiddle-dallied sideways, and then within the macro from 750 to 810, this is very important. Price ultimately failed to break this fair value gap. It did here, but the candle immediately following it closed right below it. So for me, this is a valid rejection. It closed lower, and then eventually it took out 630 lows. And once it did that, price, I was looking at this inversion fair value gap. I wanted to take the trade closer to here, but you can see how what price did is it rejected it with this 1 minute candle. The next one, it closed up all the way up here. I did manage to catch it almost at the top of this candle. Again, wasn't too happy with my entry. I did have my stop loss below that candle and below that inversion fair value gap. And then since then, price was printing higher. I did know that it was CPI. I don't trade usually CPIs, but I just butted my stop loss right against the very last swing low before the news. And I said, worst case scenario, it tags me out with minimal slippage. And best case scenario, it hits these relative equal highs here that we see, which are London highs. Like, look at that, 1, 2, 3. Even though that this high here is slightly higher than this one, again, it just wicked above it. It didn't close above it from a body perspective. So my eyes and what ICT says, those are still relatively equal highs. So again, the position was taken there. Stop loss was managed aggressively and was roughly, let's call it a 6-to-1 with some scale-ins that I did like around here. So this was my first position. And then leading up to 9:30, after a run like this, usually you have what? Consolidation, right? Clean runs, then you have consolidation, and then you might have another clean run after. And after that, price consolidated, right? I had this bullish fair value gap, BISI, marked here with its quadrants. ICT now uses eighths. I think that's a lot. I use eighths when the range is really big, or I'm using it on like a daily fair value gap or suspension block. But here it was all divided into quarters, into eighths. And leading up to 9:30, which is right here, I'm going to draw a line. What color will this line be? It's a dotted line right here. You can see what price did. Above us, relative equal highs, 1, 2. Below us, relative equal highs, 1, 2. And then we've got our relative equal lows right here, 1, 2. Again, it just wicked below this low. It never closed below it from a body perspective. Again, it's not as strong, at least this is how I view it. It's not as strong as a relative equal low, but it's still relatively equal, hence the name. So ultimately, we have these two levels. And the rules that we have to trade by is if there's two levels of liquidity and we're in between the both of them, what you have to do is wait for one to be taken. When one of them gets taken, just target the other one. Again, it's a very simple model. And what I've done here is I actually deployed one of ICT's very simple models. It's my go-to model. It's using the first presentation fair value gap. And what that is, it's the first fair value gap that forms after 9:30. Can't be on the 9:30 candle. It has to be on the 9:31 candle or later. And caveat, it has to displace into direction. It can't be like a little tiny one within a consolidation because that doesn't count. That's something that ICT dripped out a couple of months ago when he talked about his first presentations. But all in all, first presentation happened at 9:40 today. Okay, so I drew that candle there. Price printed lower, took out those relative equal lows. And then you can see here, it aggressively, with speed, pushed to the upside and closed above the first presentation. On the 15-second, you can't really see here, but you can kind of see it on the look in the candle. It came back lower, touched it, and then it started printing higher. Right when it did that, my entry was, it was right there. I took the long. I had my stop loss below the mean threshold of this wick right here, because it's technically considered as a gap. And I was holding to... Initially, I had it till these relative equal highs, but price started slowing down here, and I just cut my trade for a quick, roughly, it was a 2-to-1 here. So again, could I have done a better job managing my stop loss here and actually tagging the full 2.5 or 2.7% on this? Yes. Again, it was just a failure from my end. And on that note, that kind of ended off the day. We took out sell side, we took out buy side, and then price started consolidating. So all in all, guys, that's a quick recap. Very simple. Like, I'm trying to keep at least my explanations to all of you as simple as possible. I think you can't overcomplicate this. If you do, you start losing yourself. Keep it simple. Where are the relative equal highs? Where are the lows? Where's the first presentation? Is there a market structure shift? Is there a fair value gap or an inversion that we want to take after a liquidity sweep? Very simple concepts. And just those 8 points that I just mentioned, if you apply them correctly with a higher time frame bias, equity should be going up. Without further ado, guys, if you guys enjoy this content, feel free to drop me a like and a sub. I'd really appreciate that. If you guys want to know, let me know in the comments below what you guys want to see in the future from me. And again, I just have some discount codes in the bottom, which give you the best discounts across some of the firms. So feel free to support my channel that way. Take care, guys. Happy trading. I don't know if happy trading is a thing, but safe trading. I'll catch you guys soon.